And welcome to another Hola Prime Academy video. In this video, I'll be talking about using parallel channels to follow a trend. My name is Christopher Lewis, and in my 15 years of trading experience, I picked up a few things along the way. And one of my solidly favorite ways to trade the trend is using a simple parallel channel. The idea is that it gives you another way to look at a market as being oversold and overbought. There are a multitude of ways to use this tool or use this setup, but I'm going to go through some of the simpler ways just to keep it short and sweet so that you can use it right away. The trend, of course, is the most important thing here. So, unlike some traders who will use the overbought condition as an automatic sell signal and an oversold condition as an automatic buy signal, I use, for example, in an uptrend, when it says it's oversold, I'm looking to buy. When it says it's overbought, I'm looking to collect profit, not looking to short the market, or maybe cut back my position size a little bit or close it out completely. It just depends on what's going on. In other words, I only trade with the overall trend. So let's take a look at some charts and I'll give you an idea of how I use this in the real world. Okay, so in front of you I have the Australian dollar Canadian dollar currency pair. And I am using the TradingView platform, but you can find these tools on MetaTrader or any other platform. It really doesn't matter. But I know a lot of people like to do their analysis on this platform, so therefore I'm using it in these videos. So looking at the Australian dollar Canadian dollar daily chart, you see that we have the 50-day EMA and the 200-day EMA both going higher. So the first thing that you're looking at is you're like, okay, well, I want to be a buyer of the Australian dollar over the Canadian dollar. Pretty straightforward there. You can go to the trendline menu and go to parallel channel. And there, like I said, there's the exact same thing on MetaTrader. And you can click and drag your trend line up and then reach the top and click it again, and it puts this in play. So when you see this, full disclosure, you won't know what's going on for a while. You can see down here, there's really no real way you would have known. And there's no real way you would have known at the first sign of major resistance. However, when we get down here, the second time, that trend line holds, and that's something that you should notice. Just a simple trend line tool would start to point that out. Now, when you use these parallel channels, there's a lot of different ways to use them, but I'm going to suggest that as you get to the top of the range, you're just simply looking to take profit. So for example, if you buy down in this area, you're getting close to the top, you're probably taking profit. There's also another way to do this, and it's a little bit of a hint here in this channel. On the chart, you can see there is a midpoint. So a lot of times what I'll do is I'll use this very similar to how Bollinger Bands are used, in the sense that it's an area that should be support and resistance. So I'm a buyer down here and perhaps taking half a position off once we get to the middle. A buyer in the bottom again, doing the same thing, and then hopefully letting the rest ride to the top. Notice how I did not say sell. I'm not shorting the market. I might sell my position out, but I'm not shorting the market because it goes against the recent trend. As a general rule, there are people out there that will suggest trend trading and then like counter trend strategies. My experience has been it is not worth your time to mess about with counter trend strategies. They just don't work often enough. Another thing that I would point out about these parallel channels is that they do tend to be respected for long periods of time. There are such things as throwovers. In other words, a breakout, a false breakout. Notice here when it broke out of this channel, it formed a shooting star. That's actually a very negative sign. So if you trade candlestick formations and patterns, you would have looked at that and said, okay, I might get short. This chart, of course, is the Australian dollar against the US dollar. And notice we started to form the trend line here, and every time we got to the middle, we saw a little bit of a reaction. And then once we get to the bottom in this downtrend, we saw a bounce. So you're looking to short, you're looking to collect profit either in the middle or at the bottom of the parallel channel. And again, you can use a host of different ways to do this. You can take half off when you hit the middle and then move your stop loss to break even. You can just wait to take all profit at the bottom. You can take all of your profit in the middle. There's no real right way to do this. This is like a guideline to keep you with the trend. Now notice recently, this sideways action has actually started to try to break out of this channel. So will that be a sign that the Australian dollar is about to change trends? We don't know at the time of recording, but it is something worth watching. So in front of you, I have the US oil or West Texas Intermediate oil chart on the daily time frame, and you can see that from April of 2020 to June of 2022, it was an extraordinarily bullish market. Since then, we've been fairly sideways. What's interesting is you can actually use a parallel channel on a sideways market as well. You can see there's a little bit of a reaction. This does make sense, and this explains the whole thing quite easily. When you think of it as overbought at the top, oversold at the bottom, and in the middle is some kind of equilibrium. So it makes sense that it would have that influence there. And then you can extrapolate those thought processes to an uptrend or a downtrend, and it all comes together quite easily. So when I look at this longer term uptrend, going back to the original area, you can see that it probably really began to truly show itself right here in November of 2020 in the oil market. It was a nice uptrend. We kind of took off, whatever. So again, you had a situation where you're a buyer, you get some support here and you continue to buy. However, one thing that I would point out is in March of 2022, the market took off and it broke out of this channel. And guess what? It found itself to be overdone, and then we fell apart. So you also have to recognize that once you get a move that is that sharp outside of the channel, like we saw in March of 2022, a lot of times that's not sustainable. So interesting there. You can use this on shorter term charts. There's really nothing to stop you from doing that. I would point out, though, that as a general rule, channels or really any technical analysis is going to be more reliable on longer term charts. That's just the nature of the game. So going back to the sideways idea of using a parallel channel, notice how this consolidation paid close attention to this equilibrium area, and then we broke out and took off. So there's also an area in the Canadian dollar against the Japanese yen that is worth paying attention to. On the 30-minute chart from September 16 of 2024 to September 27 of 2024, notice how we banged up against the resistance and then finally broke down through it. Also notice how multiple times we found support at the bottom of the channel. Now, the question, of course, is, would you have jumped into this market at the equilibrium point and kept buying? Possibly not, but there's at least 2 or 3 trades you could have been involved in on the way up there. Keep in mind that these channels are nothing more than trend lines. So you could just draw the trend line manually instead of looking at the channel. That's fine. That really doesn't make any difference. It is using a phenomenon of support and resistance like everybody else does. The only difference is with a channel, you have a middle area as well that gets pointed out, but you can eyeball that. Like there's nothing wrong with just drawing these three lines on the chart and following right along. As I suggested, though, really what you need to do is make sure you're going with the overall trend. That will save you a lot of heartache and frustration and everything else. It doesn't mean that you are always going to be right. It doesn't mean that every trade works out beautifully. Another thing that I would say that we need to look at is the possibility of placing stop losses. So on a channel, typically it's pretty straightforward. You just put it in an uptrend underneath the bottom part and in a downtrend above the top part. Once you get to the middle, that's when you start thinking about, do I want to move my stop loss to the break even level? Do I want to take half profit? Do I want to take full profit? That is an entirely personal question, which will have to fit with your risk tolerance, your trading psychological profile, and quite frankly, just whatever makes you comfortable.